Hello guys, I'm back testing again. This is the break of structure this break of structure shows that the market is bullish, right? Making higher highs and higher lows, higher highs and higher lows. Last week was a bearish week. It literally closed below the opening price right here. It came down, made a higher low on the daily time frame. Look at the daily trend. The daily trend is clearly bullish, making higher highs and higher lows, higher highs and higher lows, higher highs. On the previous days, we were looking for sells because our daily bias was bearish. In the one thing I love about this strategy is even if the higher time frame bias is bullish, like the weekly is going up, we can still look for sells, keeping in account that the daily is now headed towards the downside. That's one thing that I like about this strategy. You can clearly see there's no meaning in looking for buys as of now because the market is literally heading towards the downside and we don't know where the low of the week we don't know where the low is, from where it's going to make the move. We don't know, and we don't need to know that, and we don't need to predict that. Predicting the top and bottom in the market is one of the worst thing that you can do. And if the market is going down, this is our next draw of liquidity. Like, this is the sell side liquidity that we are targeting. We need to target something, right? So we are targeting that thing right there. This is the daily break of structure, making the higher highs. And if I draw the Fibonacci retracement tool, which is very important, Fibonacci retracement works. I have used it, and yeah, many people use it in this strategy. And if the Fibonacci retracement is happened below, even if it's a week, if it happens below the 0.6 level, this is called the discounted area. This area here is called the premium, this is called the equilibrium, and this is called the discounted. So if the if the retracement happened to the discounted level, it is a very good sign that the market is now retraced enough to continue with the higher time frame trend. So we can keep that in account. But even looking at that, I'm looking for sells now. But to be honest with you, the bias was not clear. When I was analyzing GU, the bias was not clear, and there was also no fair value gaps here. You can see there was no fair value gaps on the daily time frame to fill. So that's one thing again. So now whenever we are in a situation like this where our bias is not clear and we don't know what to do, we go to the DXY and analyze that. Whereas in DXY, we can see the higher time frames trend is clearly headed towards downside, making lower highs and lower lows. Lower highs, there was a supply order block here, came back, boom, made a huge move from that order block, make a lower low. And from some days the DXY has now started an uptrend. You can see it is making bullish candles consecutively, and whenever the DXY is going up, until and unless we see rejection from a point, and this rejection is not enough, right? This daily fair value gap was this big. It is filling up. It filled up like 70% of the fair value gap now. And to be honest, it can have the move from here, but we cannot predict that. We cannot predict the top and bottoms, and we don't want to do that, to be honest with you. So at this moment, I thought GU is not giving me a clear sign what it want to do, but DXY, we can clearly see DXY still has this much fair value gap. So now I ask myself, okay, so GU, there's no clear bias whether it will go up or it will continue down. So while I was analyzing DXY, it made it clear to me that now, even if it goes down from here, I don't care, but I want this daily fair value gap. My analysis will be to fill up this fair value gap towards the next week. So my daily bias was bullish for Tuesday, right? Simple as that. So now I go to the GBP USD. So if my bias is bullish on DXY, then my bias will be bearish automatically on GBP USD. So now I go to the 4-hourly time frame, looking for sells. I have already done the analysis, so no worries. This was the 4-hour change of character from where we could have started to look for sells. Obviously, until and unless the 4-hour change character, we cannot look for sells. We can, but it is not high probability. But once this change of character happened, then we can take a good trade. Now it's breaking structure towards the downside, making lower highs and lower lows, lower highs and lower lows, lower highs, lower lows, lower highs. Now we will anticipate the lower low to be made, and If we are bearish, then my target is this draw of liquidity for the next week. Simple as that. So in the 4-hour time frame, we were looking for sales. Now we go to the 1 hour. In the hourly time frame, we draw our order blocks. We draw our order blocks on the hourly and the 15th. We can clearly see there was huge selling pressure and a break of structure from this area. There was no fair value gap, which is a red flag. But even though this was a valid supply order block because of this hourly, and also Monday had a huge beautiful move from this zone here. Monday had a beautiful move from this order block here. I will show you how. If I draw this, Monday had a beautiful move here. I have already back tested it. I have already made that video. If you want to watch it, I will put the link in the description. Whereas this Asian high got swept and made the move beautifully on Monday, which I have covered it in another video. So today the video is about this Tuesday trade. So now let's see what happens. I will forward it. This was the 1 hourly order block that I was looking to trade from. If my bias is bearish, obviously I need a supply order block to sell from, because we trade order blocks. And there was also previous structural liquidity, which I marked previously as 15-minute supply zone, but this supply zone is not strong as it has not broken structure to the downside. It was a wick, so wicks are liquidity sweep, as we know. So it was clear to me that I was looking for this order block, and also I have learned that order blocks that have created the break of structure is very important, and order blocks that have not created the break of structure and looks exactly like this are not one of the higher probability ones, right? So now we wait for the Asian range. To sell, I want the previous daily low to get respected. Sorry, previous daily low. The most ideal case scenario will be the price going up exactly like it did, going to this supply and then targeting this previous weekly low. That will be our A-class setup, which happened to the T, to be honest with you. And let me show you why I took this trade and so on and so forth. Whereas now if you go to the 15 minutes time frame, there was previous structural liquidity here, there was trend line liquidity all around here. The Asian range swept all of these highs in the market, so there's enough liquidity swept to make a move. Even though the market went up, swept this liquidity, tap into this supply area. Let me show you. And at this point I also noticed something. At this point I was not looking for sells because of the buying pressure. You can see huge buying pressure. This was a doji, this was a bullish pin bar showing huge buyers here, This trade I took on basis of the DXY and EU correlation. Let me show you how. Here we can see this was the bullish pin bar, and there was inducement on 115. Purely at London session there was inducement. If you can see or not, I'm not sure, but let's see. This wick was taken out by this from 1 pip, literally 0 point some pips. This was an inducement. An inducement is a move, a premature move to take out the early buyers or sellers according to the trend. Here you can see DXY swept the Asian low. Tap into this hourly demand. This was the hourly demand right here. I've labeled it as M15. It's my mistake. So it is an hourly demand. It's literally rejecting this demand, giving bullish pin bars and showing huge bullish momentum. As you can see, this candle, we want to see this candle before taking a trade. And if we go to the EU, Euro USD has also swept the Asian high on Tuesday, and it's making a huge move. Look at this volume, look at the volume of this candle, and compare it with GU. GU is literally not even half. So after seeing that happen on the other markets, other correlated pairs, we can anticipate GU to catch up to them sooner or later and then take the trade, and the rest was history. Literally the trade played out to the T, got a 1:4 risk to reward, but we target a 1:3 risk to reward, so it was a winning trade on Tuesday. Beautiful trade, got a 1:3 with the trend. Whenever the market is going down, sell from supply order block, and whenever the market is going up, buy from demand order block. And be accurate on your daily bias, selecting your daily bias and weekly bias, and you will be profitable.